Welcome back to Trading 360. I'm Nicole Petalides. Time for the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Alan Nuckman, Chief Market Strategist at BullseyeOption.com. Great to see you both. A lot of NVIDIA, exciting news, but the market's turning around. I know you do a lot of technical analysis, but any thoughts this morning here for us, Alan?
I loved your last guess, and the facts are the facts. I know people feel a certain way, but you got to follow the facts. You got to trade what you see. And that dip that we saw, and I've been talking, buy the dips and sell the rips. I've been talking that forever. That projects another move 10% above the old highs in the NASDAQ after a 10% sell-off, and 5% above the old highs in the S&P. So we've got a little more upside. Now, let me just throw out one fact here, that the VIX is down 45% in 1 month, okay, 45% in 1 month. We're still 45% off of the all-time low of 2017, so there's still a lot more downside in the VIX. We just got within 10 points of the 3-year lows here last night or today. So there's a lot more downside in the VIX, and therefore more upside in the S&P.
Interesting. Right, because we're looking at 12 and thinking that's somewhat low because it did drop.
45%.
Right?
We're 45% above the low. That's a huge amount.
All right. Okay. How about Starbucks? What's on your mind there?
Starbucks. It's not hot coffee, that's for sure. The stock has had a sell-off, a disappointment, but I love what I see in the charts. This is exactly what I look for. I look for leverage buying, which is money flow going into the stock, accumulating leverage positions, which is happening, number one. And number two, what I look for is bullish divergence, the fact that it made new lows, but not new highs and implied volatility. So that's a very positive sign of a sentiment shift. Now, there's a big gap up above. Now, in the big picture, Starbucks has not had a whole lot of positivity here in the last couple of years. It's down 15% in 2024 alone, but those two factors is what I look for to purchase my options. We've been trading between 70 and 110 here in the last year, and in the big picture between 60 and 120. So both have a midpoint pivot of 90. 90 is very important because a move to 90 would also fill in that gap up above. So what I'm looking for is to buy an August option. August has 3 months of time, the 75 call, and it's trading for about 750. It's deep in the money. A move back that 90 is that key pivot level. A move to that 90, that option would gain 100%.
And there were so many concerns about what Starbucks is doing right, what Starbucks is doing wrong, a social media boycott, too much presence here or whatever. And yet, look, it has been creeping higher. Yeah,
it's Frappuccino season.
And then it's pumpkin season, right?
Exactly.
We're up from $71, that's for sure. Let's ask Ben what he thinks about the chart.
Yeah, we're seeing some short-term strength here, that's for sure. Starbucks trying to, again, regain composure. The longer term, I'm going to push back on that bullish narrative a bit here, but let's just begin, first and foremost, with some of the strength we've seen. I can understand Alan's bullishness here, first and foremost, the 5-minute candle chart. And it's also a prime example of what I like to look for, Nicole. That sideways consolidation, vertical separation, a high conviction trade to the upside, and then what appears to be a bit of balance forming. Now, I'm looking to see if we can start to establish a bit of a range around this $80 level because, well, I'll show you why in a second. But again, just want to point to the two separate phases of development, and I think it's important to be able to view price activity through this lens, right? It helps simplify things. Horizontal, vertical, horizontal, sometimes a little bit more easily identifiable than others. But once we start to stack these vertical, horizontal phases to the upside, in this case, you're going to see that we can establish a bit of a trend. This is a 5-minute candle chart. Normally, I feel like there's not a whole lot of information on these more granular time frames, but we're talking Starbucks, so things are a little different in this instance. But here, let's take a look here now to a bit more intermediate time frame. We've got a 30-minute candle chart here. We're going back to A couple weeks ago, the stock was trading around 71, 72, and then look at this in a very incremental fashion. Every $2, it's kind of paused, regained composure. That's why I think we could start to establish something around this $80 level. Now, again, we've gone from a 5-minute candle chart to a 30, but this is about as grande as it's going to get here, Nicole, because as you take a step back and look at this a bit longer term, you're going to notice we're holding below the 50, holding below the 200-day moving average. I mean, the 50's at $84. Look, we're down on the year to date. We're talking 20%. I mean, I'm sorry, 17% year to date lower here. And you can see a series of lower highs coming into play. So yeah, short-term strength here, but again, a little bit of longer-term weakness still.
And look, there's a lot of criticism on the price of the coffees, and the CEO came out and said, look, we provide value, but we're not translating that and explaining it to our customers, our value that we provide. So I think they're going to get more aggressive on how they communicate with the customers. All right, so there you have it. So you're a bull here, even though Ben's not necessarily 100% behind you, Alan.
Look at the bigger picture. If you look at a 5-year chart, you'll see that from a risk-reward standpoint, Starbucks it looks like a better value here. I believe people are going to continue to buy coffee. Bad market, good market, who knows? People still want their coffees. All
right. Next up, let's look at CleanSpark, which 1 year has 286% of gains. Some of your thoughts on this name?
Well, that stock's also down 60% off its 2021 high. So, there's a lot more upside. Yeah, we've got a good little push, but we've been trading sideways here recently between 15 and 25 since February. 20 is an important pivot. We pop above 20, then we'll get to the range top of 25. I'm also seeing the leverage buying, this accumulation. This is also in the crypto space. We talked about Mara a couple weeks ago, and this is what I call a looky-loo trade. So typically I buy at least 3 months at a time to take time out of the equation. But because this is a high volatility stock and more expensive options, I look to buy just a little bit less time. I buy less time. But we've been trading, like I said, that 15 level is a super level to lean on. A 15 level of support. We're at 17 right now. I'm looking at the July option. The July option only has 2 months of time. It's trading around 425. But the June option, which only has a month of time, is trading at 350. So what I can do here is if the stock stays the same, I'm going to lose about 50 cents or 75 cents of time value in the next month. But I'm looking to see if it can chase above 20 and then make another push. The July 15 call, here is the play. 15 is a super support level to lean on.
Right. Okay, so we're watching the 15. It's currently at 1741. Some of your thoughts, please, Ben, on this technical analysis?
And Nicole, another good example of what I like to look for, right? Those 2 phases of development. I mean, look at the chart behind me. It just really jumps out at you when you, again, look at price activity on the 5-minute candle charts. You've got 2 very easily identifiable areas of balance here, coming off the highs recently up around 20. Breakdown, sideways consolidation, vertical separation. We transition back into what becomes a bit more overlapping and rotational, somewhat limited in terms of real conviction here. 3 areas on this chart now that we've established this new range around 1750. So we've got lower extreme, upper extreme. I'm not going to really argue that it's been very well established at this point, but you can see how we've gone a bit more sideways, a little bit more overlapping and rotational relative to that high conviction move down. But this is very much a bearish pattern playing out here, short-term 5-minute candle chart. Let's take a step back and I want to show you what's going on, because there's times where it's important to be time frame specific, because if you're sitting here talking to your neighbor about this stock and you're thinking 5-minute candle chart, you're like, hey, I'm bearish this. But if you take a look here at the longer term or more intermediate, a 4-hour candle chart, you can understand why there's a bit of a bullish narrative playing out here. We have value, which has actually been forming at higher and higher levels. So again, just taking a look at where we are right now, 20 is a key area. Now, what has me concerned is on that short term, we're seeing a little bit of weakness as we came off that key area. This is that sort of pivotal area. So I feel like if you break down in the middle of that range, ultimately, what do? You open up a door for a retest of that $14 level. But get back above 20 ultimately. Hey, a retest of 24, 25 is back in the cards here. Let me show you where we're at relative to the 50 to 200-day moving average because, again, we're kind of teetering around it right now. So it speaks to a stock that's looking for a little bit more information, looking for a tilt one way or the other. Obviously, earnings didn't provide that. I do want to point to RSI, which is really providing a lean one way or the other. But compared to Sbux, I mean, look at this stock, up 59% year to date. I mean, one that's done well. Now, again, kind of started out a little bit down in the dumps in the beginning of the year, but has basically performed fairly well, doubled, almost tripled since.
Yeah, and look, I mean, this is all Bitcoin related too. When you think about Bitcoin mining and the run that we've seen and how Bitcoin was back to over 70,000 in this past week. Final thoughts on this name, please, Alan.
Limited risk Bitcoin play, and Bitcoin's got a lot more upside potential here. Another move above that 70 can make new highs and get that market moving. And like I said, the key here is risk reward. Ben said it twice. A move above 20 sends it to 25. At 25, this option gains 100%, and that's the math I'm looking for.
I also liked when he talked about how we talk about the stock with our neighbor. That was a good one. How about Cien? We look at Cien, right? When you're talking about the 5-minute candle with your neighbor, whatever candle that was. So 48.71 right now for Cien. It's down over 1% today. Is there some room here on this one? Where are you headed on this one, Alan?
Well, I'm coming to a holiday, and I like the flag pattern here on this chart. Sideways consolidation, really, really tight here recently. And the big picture has been between 40 and 60 for a year, and it's down about 22% from its one-year high. So 50 is the upside pivot, and we're right there. So break above that sends it to the range top at 60. There's also a gap up above at 56 to fill. So there's a lot here, but that 40 level is a super support. 40, 40, 40. I'm looking at the October 45 call. It's got 5 months of time. It's deep in the money, a 70 delta. I'm also seeing my money flow indicator light up here, and you're seeing leverage accumulation in this stock, and that's a sign of smart money movement. So I like a lot of these things, and it's a tech stock that really hasn't participated just yet.
Okay, and so you're up here. Let's hear what Ben thinks about the technicals.
Nicole, which has me a little bit concerned, right? Why not is what I'm starting to think. But I understand what Alan's talking about in terms of this 50 level. And if we take that out with conviction here, we could see some upside potential. Let's just begin with a 5-minute candle chart. And we'll work our way up again slowly. There is some strength as of recent coming into play, so we are starting to regain composure. You can see from down around that $45 level back up above 50 briefly. We're kind of hanging out around 48, 49 right now, but I went ahead and just identified some of these areas where my eye was drawn to, where the market's kind of paused. You can see some conviction to the upside a couple weeks ago, and then again, we've been sort of range bound, as Alan mentioned. 49.50 is the key area that I've got my eye on. Let me show you exactly why as we take a step back away from the 5-minute chart. Again, only so much information that can be pulled from that, but this is where things get a little cloudy, right? Because you got a bit of a trend up on the more short-term, more intermediate 4-hour candle chart, a bit of a downtrend playing out here. But let's get into a longer-term weekly, which is still indicating that the bears are in charge here, Nicole. But Alan mentioned 50. Get above 50, ultimately open up a door for a retest of that $60, $62 level. So this is going to be a pivotal area. I agree with him right here, where the bulls are going to either make or break. Still within this range, could see some upside potential and still stay within this longer-term trend to the downside as well.
And I see a few price targets in the high 50s, even in the low 60s as well. Alan, final thought there?
60, this option gains 100%. It's about the math. And I do want to talk about, I will be with my friend Ben tomorrow morning on the Futures Show at 7 a.m. talking about taking advantage of the opportunities in futures as well.
Thank you. Everybody should be watching that show. They should watch the network all day, all night, overnight,
Absolutely.
24/7. SchwabNetwork.com. Alan Nuckman, Ben Lichtenstein. Thank you both. Good to see you. Thank you. Coming up next, we're going to spotlight Koya Therapeutics, a clinical stage company that develops therapies for ALS and Alzheimer's. CEO of the company joining us next to discuss